From the offices of MrTopStep.com in the cave in Delray Beach, this is Danny Riley with today's closing print. Hold on one second. Yeah, can you believe that? I'm watching CNBC. Anyways, the name of today's video is going to be called S&P 500 Dysfunction Junction. The high of the day in the S&P came in at 2142 half at about 2 o'clock Central Time. The low came in at 2132 quarter after 9 o'clock Central Time. And last, we're 2141 quarter were up 9 1/4 handles. Total volume is a total joke. We're going to talk about this a little bit. There's a total of 780,000 minis traded. The pit volume is very, very low. I think it's under 400. And in Globex, they did 160,000 contracts, which is very low for a Globex session. And that comes out to a total of 620,000 minis. If you were kind to the program traders and algorithmic traders, you would take half of that for algorithmic trading and program trading, and that would bring you down to 310,000 contracts traded in the E-mini S&P 500. Now, the MIM is showing size to buy, 650 million. It started out like 250, 350, 250 million to buy, started just going right up. And the S&P is not far off its highs of the day. I just covered a short here. I tried to get a little late day, get into that little late day blip down before they run them back up, and then they sold off a couple handles and then went right back up. And I'm seeing the MIM, and I'm saying, don't fight the MIM, not under these conditions. So, anyways, today after the close, we have earnings from American Express, eBay, Mattel, and Las Vegas Sands. Tomorrow before the bell, I've got my notes in front of me. We have earnings from E-Trade, Microsoft, PayPal, Verizon, and on the economic front, we have a decent economic calendar too. We have the jobless claims number, we have the Philadelphia Fed business outlook, and we have William Dudley speaking 3 separate times, and we have the existing home sales number. And those are always important numbers. I'm telling you, more and more I think you're going to want to concentrate more on these kind of, just on the housing market and on interest rates and home mortgages. Pay attention to this stuff. I think it's important. Now, I know the bonds had a trip down to 162.16, and they've made it back up to 165-ish, but they had a nice collapse, and I'm not sure that that's over yet. But anyways, look at the talking heads are trying to spook everybody about these earnings, and these earnings are not coming out all that bad. Are they great earnings? No, I don't think they're great, but they're not horrible earnings. But let me jump onto this next thought. I've got to ask you something. Is this election making people more cautious, or I don't even know if the word's cautious, concerned? Now tonight we have the third debate, and I really think that Donald Trump is just going to go off an edge tonight. They just did this Wall Street Journal poll that has got Hillary at 51-41 going into this debate. And my question, I said this on Twitter and I said this on Periscope a couple of days ago. I think the real problem here is what we're learning is that Donald Trump potentially could have been a good candidate for the president of the United States. He may have represented some change that is badly needed. But on the other side of the coin, I think what we've learned is he's very undisciplined. And at the end of the day, my question to you would be, and like I said on Twitter, how do you tell a billionaire to shut up? You can't. And you can't tell Donald Trump to shut up. He won't. So anyways, I started talking about this about a week and a half ago. There's still this kind of funny feeling to the market. And what I'm thinking is that we're going to get past this October expiration. The stats have been pretty favorable. They're okay going into the end of the week and tomorrow. But at the end of the day, it's just this big water in the bathtub type trade. And we've got a series of higher lows that are setting up, and there's a bunch of buy stops that are setting up, I think above 40, 42, 44, 45, and then above 48 and a half. I think the S&P gets back up toward 48 and a half. You could potentially get up to 40, to 41.65-ish, I think. Now, my friend, I'm just going to call him JD because JD is an Irish guy, and we talk a little bit on the about what's going on in the market over the email. And yesterday he came out and he said that he thought that he had at least jump in on these gap up opens and get long, and hold that, and then look for a pullback in the morning, and then add to your positions. And he was right about that. So far, he's been right about that. Yesterday, he's been right about that today. And then he went on to say that he thinks that, like I was trying to talk a little bit about, that maybe he calls it the room is getting too full, meaning that either people don't have an opinion or people are just continuing to think the markets are going to go lower into all this rate stuff, or, the election and the rate hike and all this other stuff. He went on to say, JD, I hope you see this video, that he thinks that the S&P's got a potential to trade up to 2350 at year end. It's a lot of room to cover in a short amount of time, but it's not impossible, JD. Now, at the end of the day, what I think we're really seeing is we really are seeing a pullback in this kind of day trading volume. And there's a lot of reasons for this. One, I don't think people have been making money over the last month or so in this kind of choppy stop and go trading range that we're in. One day the markets look horrible, and then the next day we're up. And as I've explained in my last video, we've had a lot of down 2 days and a lot of down 1 day, and then a lot of up 1 days and up 2 days in a row. But we haven't had many 3-day downs, and we haven't had very many 3-day ups either. No 3-day downs or 3 days up. It's all 1 and 2 2-day moves. Excuse me. But anyways, at the end of the day, you guys, I think that the best way to say this is that I've worked with a lot of hedge funds, and I've worked with a lot of the big investment banks. And you guys know I did the AIG business. I did the UBS program trading business. We did more capital. We executed for everybody. Citadel, BMO, SocGen, go on and on and on and on and on. And throughout all that, those traders relied on me, not just for me picking up the phone and fighting for their orders, but for that feeling that I got. And I know that someone would say, well, he doesn't have all the tools he needs. He didn't go to school. But I would disagree with that. I believe that my years on the trading floor, one, dealing with the institutions and the big hedge funds and all the prop firms and everybody else, and the little guys, the big guys, and everybody in between, it's given me a unique view of how order entry is put in, even today. Because a lot of that same order entry that existed on the trading floor is the same type of orders. It's just being put in electronically. So in that regard, nothing has changed. But the other part about it is when I was on the trading floor, I had a unique ability to see the last 7 prints on the board. And that helped me read between fair value and the last prints up on the board. It was see these prints going over and over and over all day long. Well, I believe that what's going on here is I don't do anything special when I try to call out a high or a low. I'm just doing it visually off of where I think volumes go down to a low. They get very, very thin. I see some buys coming in. Markets have reversed lower. I know people have gone from long to short into the decline. I'm a knife catcher. So I don't have a specific technique, I think, that I can really, really down and dirty teach someone. But at the end of the day, I follow the VWAP. I follow volume. I follow my own market feel. And that's what the pit bulls depended on me for. That's what a lot of traders have depended on me for over the years. A lot of people out there in the internet land, on Twitter, on Facebook, everybody. And I don't want to let anybody down. But at the end of the day, I have to tell you that I'm a little confused. I don't know that I think that the S&P is going to get past the October expiration. I'm a little concerned about the last week or so of October and the beginning of November. Now, let's see how this goes out. October, excuse me, I thought I had it on the right month. Let's see. Well, Okay, October expiration, well, tomorrow, it says late October is time to buy depressed stocks, especially techs and small caps. And then for the expiration Friday, we know that the stats are good on our cash study, but it's an expiration date down 6 straight, 2005 to 2010, and 8 of the last 12. Well, our stats actually, the expiration study for Friday shows it to be a semi-favorable day, but Stock Traders Almanac saying that it's a down day. And then, let's see, going into the end of the month, well, the Friday, the 28th going into the end of the month, is the 85th anniversary of the 1929 crash when the Dow dropped 23% in 2 days. And then let's see. And then Halloween, and there's nothing special going in there. And then the first trading day of November has the Dow up 4 out of the last 6 occasions. And it's also the beginning of the Fed's 2-day meeting. So while the markets may be quiet, there's still a lot of moving parts out there, my friends. And I think that you got to kind of be careful here, that there could be kind of some little squeeze here going on over the next couple of days. Going into the end of the month, it may be a little different. We're going to leave it like that. I will be back. This is the forum. I don't mind doing the green screen from the trading floor, but this is much easier. I'll see you guys later, and thanks.